Hi everyone, today let's take a look at the big bank forecasts for the S&P 500, as well as sentiment, seasonality, then we'll get into the charts, then we'll look at my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So everyone's gotten out their crystal balls for this year and they have placed their targets on the S&P 500 for the end of 2024. Deutsche Bank and Bank of America both have very bullish claims at 5,000 and above 5,000. You can see Goldman Sachs does have a little bit of up room from here, closer to 4,600, maybe 4,650. Then you got Morgan Stanley as well as Barclays and Wells Fargo between that 45 and 4,600 area. And then JP Morgan being the lone bear. Actually, you can see Morgan Stanley really at 4,500, which is slightly below current prices. And then JP Morgan being the biggest bear down around 4,200, just below that tick mark there at 4,250. So quite a bit lower than current prices. And looking at the actual numbers, you can see Bank of America and Deutsche Bank hitting over 5,000, which would be an all-time high above 4,800. So very bullish going into next year. Whereas JP Morgan is down about 8% from current levels with a target of around 4,200. So definitely interesting to see all of these across the board, and they are really all over the place. Can we rocket higher to that $5,000 mark, or is 4,200 a more realistic target? Seems a bit like a shotgun blast to me. When it comes to the end of 2024, personally, I would guess that we are going to be a little bit higher. I do expect some interest rate cuts, and as long as nothing breaks, then we should be going a little bit higher on the equity side as yields come in a little bit more. But I do think that is a pretty big if. Taking a look at fear and greed, we're at a 67, previous week at 66, so we basically haven't moved. Markets have been basically flat until the Friday session. We are definitely in extreme greed here now on momentum. Strength also in greed. Breadth starting to get into that greed category. Put-call ratio also in extreme greed. This is starting to propagate basically throughout all of the indicators now. Almost all of them are in greed, except for market volatility, still in that neutral range right at these previous lows from July as well as September. Safe haven demand, greed, and then junk bond has neutralized once again. Moving over to sentiment, you can see we have really strong bullish sentiment, almost no bears, below 20%, well below historical averages by more than 10%. Bulls more bullish by more than 10%. Seems like everyone thinks the market's going to go higher over the next 6 months. We haven't swung into extremes yet, up above that 50 level, but once we do get there, you would expect to see a little bit of a market turn, as I prefer to use this as a contrarian indicator. Moving over to the Almanac Trader, I did sign up for this recently, so I'll be touching on it periodically. Probably not every video, but we'll see how that plays out. And right now you can see we're right in this beginning portion of December, which typically is pretty sideways choppy price action, maybe slightly bullish in these non-election years, which are the dashed lines. You can see the Russell typically underperforms in the early part of December, getting down to maybe 1 or 2% to the downside. And then once we get into this mid-month, after the 15th, heading into that Christmas and New Year's season, then markets tend to outperform really aggressively, with the NASDAQ averaging around a 4% gain on the month, and then the rest of the markets between that 2.5% to 3%. Moving over to the calendar for next week, basically nothing here on Monday, factory orders, not much. And then looking at Tuesday, S&P's global PMI, that could be interesting. ISM non-manufacturing PMI, definitely interesting. Non-manufacturing prices, and then the one that I probably care most about here is the JOLTS report, continuing to watch that jobs data. Definitely interesting, definitely driving Fed decisions. ADP non-farms on Wednesday, as well as crude inventories. That's been more interesting here recently. Then we got Eurozone GDP, as well as initial jobless claims every Thursday, which has been going up slowly. Fed balance sheet, always interesting to watch. And then on Friday, this is going to be the big one. We have unemployment rate, as well as non-farms, average hourly earnings, month over month and year over year continue to be interesting on the inflation side. And then we do have those Michigan numbers at 10 o'clock. Overall, a pretty packed week with all of the unemployment and jobs data. Moving over to Max Payne just for a moment. Pretty low call strike, but here at 460 giving you that call wall. Top of the puts right now, 459 to 460, right in that zone, which is basically the same as current stock price, meaning that we have a little bit of room to the downside. But there are still quite a bit of puts in the market, 2.19, which has been what we've been seeing recently, but that's still a very high put-call ratio, which is probably why markets haven't been able to fall despite the strong rallies that we've seen. There's just too many puts for markets to move lower, which is interesting considering how strong sentiment is to the bull side. Still so many puts in the market. Max Pain 450 doesn't mean a whole lot with just under a million options, but we'll continue to follow this one through the week. Moving over to the S&Ps on the monthly chart, we did get a monthly close on the Thursday session, and you can see it was really strong, 8.92% to the upside, hit that trend line to the penny. We're still holding above the trend line, but below this longer term trend line. Let's go ahead and extend that out. Even if we hit that trend line again, that would put us at 46.55, which is about right where we talked about on Max Pain. Gives us just a little bit of room in the current trend. If that level breaks, then we're all the way up to around 4,800, and then that longer term resistance up around 49.55, just below that 5,000 price target that we talked about. You can see those all-time highs sitting around 4,800. Bullish momentum, bullish RSI, everything looks clean here to the upside with just a little bit of overhead resistance. Moving over to the weekly chart, really no change to the thesis. You can see those same levels we talked about, bullish momentum, bullish RSI. Everything still looks good on the weekly chart. Zooming out just a little bit so we can see that volume profile. You can see volume does pick up around 4,700. That could be an interesting area. That is right around the highs here before that wick high on the all-time high. So 4,700 gives you about 100 more points of upside potential if we can break this high going back to 24 July. Moving over to the daily chart, just to look at those levels, you can see 457.57 is the current support. You can see trend sitting down around 457. Trend resistance on the SPY up around 464. Next level for me, 463.70. And it is interesting to see momentum has not picked up here, but volume has been increasing on this rally, which continues to tell us that we should be going higher. I've been looking for that 46th. I've been looking for 460 for a while, but it does seem like we're probably going to push through that here up to that next level at 463.70. Moving over to the NASDAQ on the monthly, very similar thesis. Big up month last month, 10.67%. This month, 0.31, bullish momentum, not overbought on the monthly. Got about 4% of upside to that 16,630. Which would put us at all-time highs for that next trend. Does not look nearly as clean as the S&Ps in terms of trend, but still looks like there's some upside potential here. And then looking at it on the weekly chart, you can see we did get a doji, 0.1%, straight sideways. Momentum still slightly bullish, RSI not overbought, still slightly bullish, continues to hold this lower trend line. And then you can see that upper trend line, like I mentioned, around 16,447, giving you a little bit of upside potential as long as this trend line continues to hold. You also got the cross here with the 9 crossing above the 21 EMAs on the weekly chart, which is good. And overall, everything looks okay. Moving over to the daily chart, it does look like a little bit more like a consolidation and pullback type scenario. We've been talking about it for a while. You can see this momentum has pulled back all the way to zero. The question is, what happens now? Are we going to see the breakdown in momentum? And then this follows through like the move you got here, big bullish, starts to pull back, cross into bearish, continuation lower, which ended up being a pretty significant move over the next 6 days once we crossed into bearish momentum. And if we do see that cross on Monday and we start to see a little bit of follow through there, got the 21 sitting at 381.97, just above my level, 381.54. But the candle on Friday was reassuring, got all the way down to 386.20, touched that level, which we also touched on Thursday, continued to hold support, got back above 389.15, and overall a pretty strong close. Looks like a dip, touch, and if we get the continuation Monday as a confirmation, then this consolidation could break to the upside. Moving over to the Russell, we got a massive week. 3.11%, big bearish momentum, got that crossover. We'd been moving towards it for 4 weeks. Now we got the crossover on strong volume. You would expect this to follow through up to that 144 EMA, ultimately up around 196.43, giving you quite a bit of upside, around $15 of upside potential there. If we do end up getting a move like that, that would put us up around these previous highs. You can see we had that move very similar, actually, pulled back, touched that level, rallied through to the 144, and that's really what I'm looking for here as well. The 200 could give you a little bit of resistance, but ultimately I do think there's going to be more fall through to the upside, despite the seasonality of December, which tends to be a little bit weaker in the early portion for the Russell. And then looking at the daily chart, kind of looks like an inverse head and shoulders, left shoulder, head, right shoulder. Big move higher, consolidation held above that neckline, and then big push on the Friday session all the way up to 184.91. Next level for me, 185.63. Up above there would be 189. Quite a bit of room in that zone. You can see last time we were here, we broke through there very quickly right to that next level and ended up pushing up to 191.89. So not a ton of volume through this area. You can see it on the volume profile. If we get above the zone we're in right now, you would expect a pretty rapid push through that zone, in my opinion. Bullish momentum, bullish RSI, not overbought yet, massive volume. I would expect a continuation on this going into next week. Moving over to the Dow, we got a massive breakout week, 2.61% on the week. Bullish momentum, we kind of expected that with the momentum swing. You can see we're just about a week behind the Russell. If we get the same continuation, we should see strong push there as well. Broke well above this previous high. And zooming out here, we're almost to all-time highs on a closing basis. 365.11 is that level. We'll go ahead and add another one here at that wick high. That's right at 369.50 to the penny. So next level, 365.11. Above that, 369.50. It does seem like we're going to get a continuation. There has been no signs of stopping here on the Dow. Looks very strong. Moving over to the daily just for a moment, you can see those really strong pushes on Thursday and Friday. Momentum bullish again. And this is what I was talking about on the SPY. If it pulls back to that zero area and then you start to see a resurgence, certainly possible. Again, volume continuing to tick up with this rally, giving you the expectation that this should follow through. Moving over to the equal weights, very strong on the week, 2.46%. As you would expect, Russell and the Dow continuing to do well, which makes the equal weight do pretty well, as the equal weight tends to be about a blend of the two. Bullish momentum, bullish RSI, looks clean, got above 149.82. Next level, 153.19. And then above that, you have the high here from mid-July at 155.79. Does make sense for it to push through those levels as long as we see the continuation in everything else. And then looking at the daily chart, you can see we were in this rising wedge, broke above that trend, broke above the highly traded zone. Zooming out here, you can see highly traded was actually a little bit lower on the longer time frame. Once we got through there, it was pretty smooth sailing. We're in a zone here. Next level in terms of volume would be 152.45, just below my level at 153.19. You can see that's right at the tops here from this consolidation at the beginning of August. We're above all the MAs and SMAs, bullish volume, bullish momentum, bullish RSI. Everything looks clean, except for the fact that we are super overbought here on the daily chart. Moving over to the ratios, starting off with SPY Russell and NASDAQ SPY. Look at this big bearish candle on SPY Russell. Russell outperforming massively. We kind of topped out, consolidated, rolled over. It does seem like we're going to get some more Russell outperformance. We were basically at all-time highs. We hadn't been much higher than this for pretty much ever. Zooming out to the weekly chart, you can see there was a bigger peak here during the dot-com bubble. Obviously, that's not a sustainable level. We did get slightly higher than this in 1990, up to that 259 level. But overall, you can definitely tell this was elevated. It was due for a pullback, and now we're starting to see that 21 EMA sitting down at 242, and I would expect at least a pullback to that level, momentum rolling over here on the weekly chart. And then looking at the NASDAQ SPY, NASDAQ underperforming the SPY. The rest of the economy is performing better right now as tech seems to roll over a little bit more. Momentum and RSI starting to break down here on the NASDAQ, with the Russell being the top performer. Moving over to SPY versus the M2 money supply. So this is the chart that I am most concerned about right now. You can see we are right at this pivot point, right at the wick highs here from our all-time high, right at the wick highs from July. The M2 money supply continues to shrink, and prices in the markets continue to go higher. So this ratio is going higher, and we are right at those levels. Typically above 22.05 is unsustainable over the longer term. Only time we have done it in history was the dot-com bubble, and obviously we pulled back massively from those highs. So just understand that in this zone, it's typically unsustainable and more of a trading range, but that does not mean that we can't break much higher here, just like we did during that dot-com bubble. And just to give you an idea of what that looked like, you can see it here. We broke above this 22.05 level, rallied all the way up to 32, obviously unsustainable, and then we pulled all the way back down to this 14 level. So massive, massive rally, massive, massive pullback, long-term cycle. And then since then, we have not gotten back above that 22.05 level for any length of time, touched it pre-COVID, touched it during the all-time high, and then we pulled back from it consistently each time. And zooming in here now, it does kind of seem like we're going to break above it. The question is, how high above it can we go? But understand that this is likely to be a bubble above this level. Moving over to Apple and Tesla on the weekly charts. Apple slightly bullish, 0.67%. We had a doji last week. Momentum slightly bullish on the weekly. Interesting. Kind of thought we would see a pullback there. Didn't quite get it. But weekly momentum says we're still good. I just want to highlight daily momentum is very small on the bearish side. Kind of looks similar to the SPY, where we're consolidating, had a slight dip, held that level, and if we rally through here, 193.96 is the next level there. And then looking at Tesla, continue to throw wicks to these trend lines. This would be a third or fourth test, depending on how you're looking at it, with a first setup, then we established these trend lines, tested it here. Now we're testing it one more time. Continues to show rejections. We've gotten 3 wicks in a row, but momentum says it still could happen. Let's go ahead and look at the daily chart. You can see 3 big bearish days in a row. Got close to that 21 EMA, but 323.57 continues to hold. We've tested this a lot of times. As long as that continues to hold, we should be in good shape. If this level breaks down, I do think there's a lot of downside potential on Tesla. Moving over to NVIDIA and Microsoft. NVIDIA had 2 big bearish weeks in a row. You can see we're still above all the EMAs and SMAs. We did wick all-time highs 2 weeks ago, but since then we were down 3% and then 2.2%. Everything says this should at least follow down to the EMAs, down around 447.13. Momentum bearish, RSI bearish, semis struggling a little bit. And then looking at Microsoft, bearish week, 0.77%. This is still an all-time high and still very much an uptrend, but it is an inside candle. Momentum seems to be slowing here slightly. Volume did pick up on that bearish week after hitting the all-time high. If we get a confirmation candle down this week, that could be a little bit of a weakness here in Microsoft, pulling back to the EMAs, which would be a pretty substantial move. Those are down around $350, or about $24 lower from current prices. Moving over to staples and discretionaries, both of these look pretty good. Staples has had 5 weeks in a row of bullish movement. We're at the 21 EMA, but we're just above 70.85. We've been watching that level for a long time. As long as that level holds, we should be in good shape, but the 21 EMA could be an area of resistance. If we push through it, should be pretty clean up to 72.50. You can see a little bit of consolidation here in this zone, but ultimately I do think this is bullish. I think markets are starting to rotate out of tech and into staples. Discretionaries also had a pretty good week, got above 170.68, next level 174.76. Bullish momentum, volume increasing on that crossover, and if 174 breaks, then we're up to 180.10 and starting to break out of this consolidation back toward these all-time highs. On discretionaries, I do think that that's possible as long as Tesla can continue to hold up. Moving over to financials and industrials, not sectors I talk about too often, but financials had a massive week. It's been doing really well since this 31.38 area. It's broken above all the EMAs and SMAs, all my most recent levels, broke above the July high. Next high for me, 36.90. Does seem like it's going to hit that level. We're right at this consolidation pivot point high, which I do think is interesting, but realistically, I would expect it to go through that area as long as yields continue to stay low. Financials are starting to recover from that move in yields. Industrials, very strong. Looking at this next high, let's go ahead and add a level at that close, up around 110.27. Does seem like an interesting level as long as we can break through this kind of pivot point high. Momentum bullish, RSI bullish, volume bullish. Everything looks good on both of these. And this is really what I'm talking about. Lots of other sectors starting to participate in the rallies that tech kind of started. Moving over to the 50 and the 200 day breadth, 50 getting pretty high. 92.25 is the region we start to see pullbacks. You can see we rarely get above that level for any length of time. Did do it slightly here in May of 20, held above it for 1 week, and then we broke down massively. That is a very important level, but we are rocketing towards it quite quickly there. I do think I want to add a mid-level. Let's go ahead and put that in here right at this pivot point high from 14 November of 22. Gives you a level at 83.83, and then the next one, 92.25, super critical. It's been a pretty strong move from 10.50 up to 92.25. I do think we're going to hit that level, but once we get there, you can see every time, got here, pulled back massive, got here, pulled back massive, got here, pulled back massive. So you do have to pay attention. We're starting to get into that region where pullbacks are getting a little bit more likely. 200-day still has quite a bit more room. We're only at 62.83. Big level is 91.42. Every time we get there, we pull back. All-time high is one of the only times we've gotten there. Last time before that was May of 13, and then March of 11, and then October through February of 2010. So we don't typically get into that range very often. The more important level for me is 76.04. And most times we get into that zone, we do start to see some pullbacks. You can see even in here, May of 19 started to pull back a little bit, overthrew it, and then broke down into COVID. And then once we broke below that same level here in November of 21, pretty smooth sailing to the downside, touched it again here in January of 23, got very close in July of 23. And that seems to be the price target as we continue to rocket higher into that zone. Moving over to yields just for a moment. These have been selling off massively with the Fed comments. We talked about it all week. Fed Waller came out and said they could cut. Jerome Powell tried to pull back on that a little bit, but markets did not believe him, and yields continued to go lower and equities went higher. Moving over to the dollar just for a moment, you can see on the hourly we did start to show a little bit of strength. Broke one level of resistance, held it, tested the next one, pulled back slightly. If it holds in this mid-ranges and rallies up, that could be good. For the dollar, not so much for equities, and you can see that here, big bullish candle, 0.66% up to the 200. With that high, pulled back a little bit. Inside candle, certainly could go lower from here, but this is a pretty strong bottom. We haven't seen a candle like this going all the way back to really October, so pretty strong candle for the dollar. Let's go ahead and jump to that weekly chart where you can see that big wick rejection on the week. Momentum is still bearish, RSI is still bearish, so it certainly could go lower, but this is that first kind of wick rejection, could be the start of a base. Similar to what we saw here. Did see a couple of wicks before we did kind of base off, but you can see that one wick here on 10 April ended up being a little bit of a basing area and then rallied up just a couple of weeks later. So could go lower, starting to show a little bit of strength, momentum bearish, RSI bearish. As long as this continues to go lower, I would expect equities to go higher. Moving over to JNK and TLT. JNK right at these highs. We've come here 3 or 4 times at this point. Every time we get here, we reject. Does seem like we're starting to break out. We've also had a bit of a shift in the fundamentals. Yields are coming down. People believe that they're going to go down. So we could start to break this 93.63 area, and that would give you a lot of room to the upside. You can see these longer term EMAs on the weekly, much higher, up around $98 and $99. Does look like a solid base as well. Similarly here on TLT, we got into these really deep lows, and look at this massive volume. This is big institutions buying into TLT for the longer term. Does seem like this has based off at this point. You can see we haven't seen volumes like this in basically ever on TLT. It's been forever. And this has been a very strong rally out of this zone. You have to assume that it's buying. Again, buying into that thesis that yields are going lower. Moving over to volatility, you can see we have been in this very long-term downtrend. We are back at these lows at 1275. We did show a little bit of bullishness on the week, threw some wicks to the upside, but we're still at these lows, not really doing much of anything. We could stay here for a while. We've talked about it before. Multiple weeks of consolidation at this level could absolutely do that again, but you do have to be aware that this is an area where we tend to pivot. The biggest question is when, and predicting that can be quite the challenge. Zooming out to June of 18 all the way through October of 18, and then we got in this zone for multiple weeks in a row here in 2019 in March, as well as November through December. So you can hold in this zone for a while. Doesn't have to go higher, but just understand that we are in this zone, which tends to be an area of complacency. Moving over to my accounts, I was up about $600 on the week, which is pretty good. 0.6%. NASDAQ was up 0.1%. Obviously underperformed on the IWM. The IWM was up massive. Still did make some money there, which was good. I was in before the rally, just got caught on those calls a little bit, which I should be able to roll out of that position and still be able to capitalize on that. So I should be okay there. Everything still looks clean to the upside. I do have quite a bit of protection on the Qs. I still want to get out of this position at 386. Still trying to get out of it. Haven't been able to do it as markets continue to hold and rally up and still look okay. Obviously bullish on the IWM. Not much more to say there. Overall, all of my positions are still slightly bullish to a little bit more bullish here on the IWM. Let me know down in the comment section what you thought of the predictions for the S&P 500 over the course of next year. What are your predictions? predictions. Will we be higher or lower at the end of next year? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.